Hello and welcome to the Capital Markets Program. I'm Edidiong Iwang. The Central Securities Clearing System has sustained its cybersecurity advocacy as it sensitizes financial market participants on the rising rate of cybercrime. In a webinar organized by CSCS, financial market stakeholders, including bankers and the capital market operators, dialogued on innovative measures for preventing cybercrimes, dire need for increased campaign and collaborative investments to control the rising rate of cybercrime. The Chief Executive Officer of CSCS, Haruna Jallo Waziri, notes that cybersecurity is a collective effort and everyone must play their role to preserve the integrity and sanctity of the financial market. Listed lender Unity Bank is predicting gross profit of 4.97 billion naira and interest income of 3.35 billion naira in the fourth quarter of 2020. In a release sent to the Nigerian Stock Exchange during the week, the bank sees a pre-tax loss of 1.65 billion naira and loss after tax of 1.80 billion naira. Unity Bank expects net profit from funds to come in at 462.14 million naira, while net operating income is seen coming in at 324.56 million naira. Well, it's been a packed week for the markets, beginning with the CBN's Monetary Policy Committee's rate cut decision, and then the bond and OMO auctions by the Debt Management Office and the Central Bank of Nigeria, which offered lower rates across maturities. But what are the implications of this rate cut on the economy, and what do lower yields in the fixed income space mean for equities? Paul Alaja, a senior economist at SPM Professionals, joins us now in our Abuja studios to help answer these questions and more. Good evening, Mr. Alaja. Thank you for joining us on the program.
Good evening, and thank you for having me.
Well, I'd just like to begin with this. What do you make of the MPC's decision to cut MPR by 100 basis points and to adjust the asymmetric corridor?
Well, MPC was faced with 4 different issues and different decisions. Recall that National Bureau of Statistics had released the growth rate and had said that as at Q2, the GDP growth rate stood at minus 6.1%. It has also reported what unemployment figure was at that time. It had revealed to us that unemployment figures was 27.1% and underemployment about 28.6%. So apart from that, we also have what the figures of inflation was, which is 13.22%. Monetary Policy Committee is also faced with the option of what exchange rate was, particularly for importers of machines and inputs. And at that time, it was also mentioned that parallel market rate is about 465. CBN spot rate stood at 379, while our window was around 386 naira to $1. So what were the options? CBN's core mandate and that of MPC was price stability. If they had said rates should increase, which many people were expecting, of course it would have been to battle the soul of the economy against the finger of inflation and of course that of exchange rate in order to attract more revenue, more fund, more FX to the foreign reserve. But CBN on the other hand fails for a greater goal, and that of MPC, that for a greater goal it is better to protect the economy for going further down in terms of negative growth rate. So with this, which is expected that third quarter GDP report, particularly last quarter report, because that's where you have more of this impact, will not be as low as minus 6.1%, even though we may not still have a positive growth. Recall that MPC has not envisaged this deep. It envisaged possibly -1 or -2% GDP growth rate. No one was expecting that the negative growth will be as high as 6%. So on one hand, we might have a U-shaped recovery. Apart from that, unemployment is a major factor. When you combine unemployment and unemployment together, you have more than 55% employment issues. So it is expected that with this policy, if fiscal authority will communicate and in fact interact with the decision of monetary authority, we might also see that at the end of the year, there will be reduction in unemployment figures. But that largely will depend on what decision of fiscal authority appears to be.
Well, you've touched on the impact this will have on the economy, but what will the rate cut have on, what will the impact be on banks and businesses?
Well, you see, that will come from not just MPR, but what our asymmetric corridor now is. So asymmetric corridor is now 100 to minus 700 basis points. That is what we have. So what we have now is that central bank will lend at 11.5% plus 1%, and also we borrow at 11.5% minus 7%. So effectively, we are talking about 12.5% and 4.5%. Both figures are lower than what it was. What central bank is saying to banks is you need to get your hands off the lazy mood. You need to invest in the real sector. You need to invest in the real economy. And there seems to be gainers in all of these. Why banks may appear not to have the easy way out, there are gainers, of course. The cost of servicing debt will significantly reduce from what it was. And more importantly, capital market will be a major recipient of funds from the market that we had to the market that is coming in from the market that most of the funds are talking about, the debt market or fixed income market to capital market in the coming period. And some of this will start to play out from Monday as more and more people see what DMO rate appears to be. Apart from DMO, we saw what secondary market. We have almost 84 basis point reduction rate cut. Immediately have that decision was released on the 23rd. DMO welcome with 84% cut. Secondary market welcome with over 30%. We also saw how many of the market has responded. So the only way that seems to be available will be to invest such money in capital market. And those who may not want to invest in capital market, then the real economy definitely will be impacted. And perhaps you might see when National Bureau of Statistics will report what will happen to real estate sector in fourth quarter, you might just see that the sector would have grown better than what was released in second quarter 2020.
Mr. Alaja, I'm happy you've mentioned the debt markets. Now, with the lower rates we've seen in the fixed income space, now, of course, with this MPC decision, the rates are also going to be lower. We've seen renewed interest in the equity space. How likely is this? How long is this going to continue?
Well, I think this will continue for as long as the Monetary Policy Committee feels the main goal, the main target is to protect the economy from going further down into recession. And, as we speak, we can say the country perhaps is in recession, even though it's yet to be announced until we see what the third quarter report will appear to be. But other than that, I can tell you that Monetary Policy Committee adjusted MPR from 14% to 13.5%, 13.5% to 12.5%, and now to 11.5%. Has also played around CRR, has left liquidity ratio almost the same, adjusted asymmetric corridor to 100 and 700. So what all of that is telling us is that definitely this energy for real sector to grow. There is energy for equity market to grow, and investment, more and more investors will be attracted to that market. And for those who may not want to go into that market, and they will certainly also be investing in the real economy. And if you also saw what interbanking relationship showed at the end of the trading week, we also noticed that it was in the negative, it was lower in rates than what we had. So definitely, debt market, easy way out is not the way to go. People have to bear some level of risk. More money will be attracted. Equity market will be better priced. I am expecting higher capitalization, higher market cap in the coming period for this market.
Mr. Alaja, with the latest MPC decision, what are some of the fiscal policies needed to support monetary measures for economic stimulation?
One of those many decisions fiscal authority need to do is to quickly release funds to contractors, many contractors that are owned for us to feel the impact of unemployment to reduce significantly from 27.1% and also to reduce significantly from 28, I'm talking about underemployment now, 28.6%. Federal government, state government, local government must release fund that is meant for contractor. Now that cost of borrowing, using MPR as a yardstick, with influence, cost of borrowing will be influenced by what MPR is saying. And Monetary Policy Committee, through the Central Bank Governor, Godwin Emefiele, has made it very clear that cost of capital should be relatively cheaper. Once it is cheaper, it is expected that more and more investors will be willing to spend within the economy. And when investors spend, there is something that is certain. More people will be employed. But when fund is not paid back to bank, rather than having growth, we might also be sinking in debt. Not just public debt, but private debt that can cause even more casualty than what we have in the public. So to me, monetary authority seems to have prepared a table, golden one for fiscal authority to launch out and perhaps fix Nigeria from the current economic quagmire that we have right now. But if fiscal authority don't respond quickly enough, I'm afraid most of these decisions may even have negative impact at the end of the day.
Well, during the week, the DMO and CBN conducted auctions which offered lower stop rates across maturities. Now, what does that say about the investment environment at the fixed income space? And what is your prediction for that segment of the market going forward?
So investment around fixed income market is definitely becoming not attractive. And like I mentioned earlier, central bank, particularly monetary policymaker, wants more and more fund to go into equity markets rather than staying with the debt market. So they want to change the attention of investors from what it was to what it is. Recall that we will not attract as much as we attracted in investment in 2019, talking about foreign investment. Why? Because we have the pandemic, we have impact on the exchange rate, and lastly, because of the new monetary policy rate, it becomes disincentive for those who might want to invest in our economy, not to invest in Nigeria today. So we need to make the best. We need to make policies that we encourage local investors to come without necessarily giving to government and expecting government to do business. It is not the work, it is not the doing of government to do business. We need to put money in the hands of private sector so that when returns come, it can expand the economy, it can grow the economy, which exactly is the goal of Monetary Policy Committee. That is why it chose against increasing rate to cutting rate so that we can have economy recover quickly from the current negative territory that we find ourselves.
So away from the MPC's decision and the market, now let's just talk about some company news. What are your expectations from earnings from listed companies in Q3 and Q4 2020?
Now, Q3, I expect that profit will be higher than what we have in Q2 for most of these listed companies. Unlike Q2, where it was bedeviled by lockdowns and extended lockdown reviews, even though it might not be as high as what we have percentage-wise, but I'm expecting that most of these companies will do far better than what they had. And you know that the pandemic also favors some companies like telecoms, listed companies around telecom, but those in media that have perhaps negative growth, I expect that they will start coming out from negative territory to positive growth. And all of this will, of course, impact what the economy outlook will look like. So even though we might still have negative growth, but definitely it will not be as high as what we had in Q2.
Mr. Alaja, please hold your thoughts there. We'll continue this conversation when we return from this break. Please stay with us. Welcome back and thanks for staying with us on the program. Paul Alaje, a senior economist at SPM Professionals, is still with us on the program. Mr. Alaje, so with all the measures taken by from the fiscal and the monetary authorities, and considering the fact that the coronavirus pandemic is still ongoing, What is your outlook for the economy in the last quarter of 2020?
Well, with the decision being taken by Monetary Policy Committee, one of the things I expect is that inflation for the last quarter of 2020 may go to about 14%. That is higher than what we have it. We also expect that exchange rate at the cash market, talking about parallel market, may worsen if there is no particular intervention. And not just because Monetary Policy Authority wants it to be so, but because I don't expect crude oil prices to go to about $70 per barrel. And if you don't have up to $60 to $17 per barrel, and the diaspora inflow is also lowered or remain the same, with the central bank, we just need to keep managing what effects will be. I also think that now that it's not so attractive for investors to put money in debt markets and they have to find equity markets to invest, government will need to be faced with the option of either borrowing money, because at a time when we saw rush by institutional investors though on the 23rd of September, but whether that will continue at very low rate of 2 to about 3.5% across various bills and less than 10% across different bonds, various products, we worry a number of investors, particularly those with a lot of expectation. Note that with 11.5 rate that we have, 11.5 as a metric corridor of 700 basis points, it will also mean that central bank we now borrow at a much lower rate than what it has. So MPR is lower. As arithmetic corridor has been reviewed, both legs lower. It will now mean that for government to borrow locally is going to be relatively at a lower rate. So we may need foreign investors or some who want to run portfolio investment in Nigeria. And for us to have such investment, our rate right now might not be as attractive as we had in January. Even though most countries in the world, their rate, when compared with Nigeria, some of them are already on 1%, 2%, and 3%. In some cases, some are even lower than 1%, but stability in the economy seems to put confidence in the minds of investors. So if other things remain the same, Nigeria exchange rate, I'm worried, may go worse than what we have now. But we hope that Monetary Authority we also play different cards to ensure that exchange rate become relatively stable in the coming period. So something is certain. Before the end of the third quarter, I'm expecting minimum of 200% on the current rate of -6%. I'm expecting an upward movement from -6% to approximately -4 to -2% in terms of upward growth, even though we'll still be in negative territory, but I expect growth to be more. A debt market, fixed income market, I expect rates to still be relatively lower until we have the second to the last Monetary Policy Committee, as the case may be, in which if rates are reviewed, then we can start seeing some changes in that market. Or if we have factors that we cannot determine, an exogenous factor that may impact the economy, until that, relatively, we expect that the rate will continue to be lower or remain the same at the very low rate that we have, and it just means that operators in equity market, we have a better day. And also, it's a good news for Nigerian government, because cost of financing loans within the country, facilities within the country, will appear to be lower, particularly those who wants to borrow and that are playing on the primary market. I expect the rates to be lower than what we have right now, which will mean cost of borrowing by government will also be lower. And CBN and Monetary Policy Committee have demonstrated that. So in the last quarter of the year, government should put money, now talking of fiscal authority, should put money on infrastructure, should deliberately invest money on infrastructure, should invest money on knowledge base that will connect the market with farms, because most of the concern of government government has been what will happen to agriculture. 20%, approximately 20% of our economy activity is around agriculture. But how do we connect these to bring prosperity to government so that we will not over-depend on what happens to oil, whose price we cannot determine as an economy? Because we cannot determine it, whatever happens to crude oil prices will definitely have huge impact on our economy. So to this end, I hope that in the coming period, even though Nigeria economy we might see end this year, is expected to end this year in negative territory, not because we have taking a lot of wrong decisions, but because we cannot control what's happened to our economy, particularly COVID-19 impact and the decision that was taken to lock down the economy for a relatively long time of 5 weeks. And even after that, partial reopening of the economy had tremendous impact. So I hope that at the end of fourth quarter, we might not totally return to positive territory. What that means is at the end of this quarter, that is in a couple of days, it will be official that Nigeria is in recession. But I hope before the end of second quarter 2021, there will be recovery for the economy.
Mr. Alaja, we've heard time and again that a recession is inevitable, but is that likely to happen this quarter or the next quarter? And how long do you think it will take us to get out of it?
Okay, so this is third quarter. It is certain, based on projections and trends, that Nigeria will enter into a recession. And how fast we can come out of recession, I think the first decision for us to recover from this recession is what Monetary Policy Committee have taken, to rather cut rates so that there could be more liquidity in the system. And I just hope that central bank will have the will to implement policy that we make deposit money banks to invest, to give money to those, to lend to those that actually need money. So I hope that this decision will be taken on time. I also hope that Monetary Policy Committee, and particularly Central Bank, the Apex Bank, will find a way around FX crisis that seems to be looming right now around the country. If they can find a way to solve the problem quickly, Nigeria will certainly come out of recession on or before second quarter 2021. But if fiscal authority don't take the right decision, monetary authority finds it difficult price stability, particularly around the exchange rate, and also price stability around inflation, I'm afraid we might be here till the end of 2021, fourth quarter 2021, because 6%, when you look at level of deterioration, in theoretical economics, level of deterioration is so very important. When you say a country is in recession, in theory, you will be considering what we call recession. When an economy grows, has negative growth quarter on quarter, that is when you compare it, for 2 quarters when you compare it year on year. So, but that is just economic theory. But when you look at the application of it, you might even be said to be in recession within 1 quarter negative growth rate. What is important? What is the difference? It is the rate of deterioration. The rate of deterioration we had was from 1%, 1.87% to -6%, -6.1%. The real negative growth, the real backward growth had 6.1% plus 1.87%. That will tell you that we had almost 8 points backward. We have not had that in recent time. I think in the last 10 years, we've not had that, or 12 years as the case may be. So we cannot say that we are not in recession. However, it's good to follow the books. What is important is not whether we are in recession or we are not in recession, because the last recovery we had in 2016, 2017 has not grown beyond population growth rate. And according to different authorities, if you say National Population Commission, or you want to look at what UNDP as said Nigeria population growth rate is, but we say population growth rate now it's average around 2.65% to 3%.
Mr. Alaja, I think we will have to close now.
The last recovery is certainly not up to that.
Thank you so much for your input on the program, Mr. Alaja. We would hope that the fiscal authorities take the right decision so that we can get out of that recession quickly. Thank you for coming on the program. Paul Alaja is a senior economist at SPM Professionals. Well, that's where we'll end the show tonight. Thank you for watching. I'm Edidiong Iwang. See you next week.